Well, good evening, everyone. Welcome back to the channel. So, what did day two of the reverse split hold in store for us for TSLY? Well, we keep recovering. We're back up higher than we were the day before. So, in the video today, I wanted to go over the cost basis that's been adjusted since the reverse split, more dividend ramifications, more long term ramifications for the fund, what we can expect. And also, I want to cover Tesla stock as well, because Tesla seems to be on a recovery trajectory. And I'm sure many of you are like me. We don't want to miss another run up like we've missed in a lot of other stocks, especially a lot of the other tech stocks. So let's go right into Tesla today. Looked like kind of a mixed day for the markets. Overall, S&P was up slightly. What is that? These ads get better and better with their catchy pictures and stuff. Okay, so the Dow was down 100. Russell 2000 remains above 2000. That's great news. NASDAQ is above 16,000. But anyway, Tesla is at 1859. So we went up another 6 cents today, or 0.32%. Let's see how we did in terms of under or overperforming the underlying. How's that for a play on words? Underperforming the underlying. So we're at about almost $200 a share. We went up another 33 cents. So it looks like Tesla actually outperformed, 0.32% versus 0.17. So Tesla outperformed. What I want to do is, let me see, I want to do a comparison over here. Let's go to Seeking Alpha. Let's ditch Yahoo and go to Seeking Alpha. All right. I'm going to do a comparison of both, which I haven't done for this particular duo in a while. Okay, let's see. Where are we? Screen share. Okay, over here. All right, so I'm gonna look up Tesla over here. You can see I have the last one up I was looking at. By the way, I'm gonna do a video on, we got some dividends announced for, I want to say Defiance. We'll have to look at those after this, so stay tuned after this. All right, so this is Tesla. There's my email if any of you all want to email me. Okay, let's see, in charting. Look, Tesla has more followers than me. Oops, there I go, addressing my channel stuff again. Okay, let's see. We're going to add Tesla, and you'll see there have been times that Tesla has tracked with Tesla, but it doesn't last. Okay, so obviously, if we look, here's the funny thing. Okay, since last February, a year ago, this is already, wow, February 20th was already a year ago. Kind of crazy. There was a point in the summer that Tesla was your best bet, and we're keeping the S&P 500 here as a total of the three. That's like our baseline. You see the S&P is like kind of the steady eddy here. This is the one that has not fluctuated. It's been up 27% year over year. Tesla's down 48% over the same time. Tesla stock is only down 4%. So, but you'll notice here, Tesla at a couple points in time here was tracking almost identically with Tesla stock. See, in the month of March here, look at that. There was almost identical performance that with the two lines here, they were tracking almost identically. So I remember like when I first learned about Tesla, there were several people that were saying if we could maintain this and get the tremendous dividends, like that would be a gold mine, obviously. But it didn't last. It got to where over the next few months it did sort of track, but it definitely underperformed. But you can see how both charts moved up in unison. And then by June, there started to become a wider and wider disparity between the two, even as Tesla recovered. Then again, Tesla stock was up at this point. See, Tesla was up way up in the summer and then started to come down. So you can see the charts here. There is a similarity in how they move, but there's obviously a wide disparity because Tesla stock was up at this point. But even as Tesla has fallen, the gap hasn't really narrowed between both of them. So it's unlikely, if at all, that this gap will ever close to where it was here. See, here they were almost identical. So that's definitely something worth noting. Let's see here. Got a couple of you on live. Welcome. Glad you all are on. Yeah, what's up? Hopefully I'm doing good today, keeping you all's attention. Okay. So yeah, as of here, obviously, S&P is your best play. Let's add for fun. Let's add I like to keep rubbing it in, at least to myself, Nvidia. Let's add Nvidia to this chart. Watch this. There's no comparison. See? Look at Nvidia. If we just put everything into Nvidia, like in a year, 236% return. Oh, this makes me sick. Um, but look, over 5 years, Tesla, well, look at this in 5 years. Look at that return for Nvidia, 2000%, Tesla 872%, S&P, and then TSLY is the worst performer of the bunch. Of course, it's new. So we would go here. Wow, look at that. Just put everything into Nvidia. Amazing. Let's see what it says here for splits. I'm signed in somewhere else. I've got yet another website to track my sign-in information for. So I am signed in with my premium account that I got for being an affiliate member. Anyway, okay, so what I wanted to say, TSLY continues its downtrend, at least since the end of last year, but we're starting to come back. See, in the month of February, so far, month over month, since January 29th. And that's right, we've got to remember that it has doubled because we did a reverse split. So we're up almost $1 month over month. So we're up 6% in the last month. In the last 5 days, we're up 3.44%, 0.32% today. But for 6 months, we're still down 35.66%. So the ramifications, like I said, the dividend is going to double. The share price, here's the interesting thing, okay, from a cost basis standpoint, your shares are going to show, look at that, $40 a share if you bought in November, which I haven't actually talked to anyone who bought in November of 2022 when this first went public. But like in July, our cost basis would have been like $33. Back in April, it would have been, yeah, like $30. Yeah, $30. So yeah, it's keep in mind it's the cost basis is double of what it was before. So what I'll do for you all here, let me see. Let me see if my dividends have reset in the portfolio. Let's see here. There's been so much movement from broker to broker over the last few years. It's kind of been crazy. Okay, I am signed into Schwab here. I love how I sign into a different account and it's got the same screen that I had open in another account. Amazing. So the coach's portfolio is coming back a bit. Let's see. What can I show you all here? Let's see here. As long as I'm not showing any account info, I can just show. All right, here. Deep breath. Who's this? Michael H. says, hi, coach. Welcome. Okay, so I'll show you all real quick here. This is the portfolio. This is the overall. We were up like 1,000 today. This consists of a Roth and individual brokerage account. So the account is doing okay overall. Nice day for the account overall. It's always nice to be up $1,000. Let's see. Of course, the brokerage account used to be worth this alone. Of course, I've taken withdrawals and I've sold a lot of my winners. Like I said, like I was saying in yesterday's video, I feel like I sell my winners and I hold on to the losers, and it should really work the other way around. Okay, so good news. So the dividends have reposted again. So I am showing estimated income. Let's see. I guess I can just show this page over here. Where are we? Balances. What's the one I want to show? Let's see. Maybe it's this one. I'm trying to not show like by account. Ah, here, perfect. Here we go. Okay, let's see. Let me show you all this one. So to this question, I am trying to find info on the ULTY. It might be Yield Max's FEPI. I wanted to do a video on it yesterday, but I didn't find a lot of info other than it's gonna actually go public, I think tomorrow or maybe by Thursday. So as soon as I get more info on that, I'll be doing another video on it for sure. Okay, so here is the equity portion of the portfolio. If we break down holdings, the dividends here are not great. There's only a couple of them that pay. JP Morgan pays, AT&T pays. AT&T is a stock I've owned for years. That was when I originally became a dividend growth investor. I bought up a bunch of AT&T, but obviously AT&T's been in the crapper over the last 6 years, 6 to 7 years. It's funny because AT&T was a stock that never really fluctuated until it merged with Warner Brothers, and they've both kind of been in the crapper since that merger. And it's weird because they have such a gold mine of content, like with HBO Max. You would think they would do way better. But anyway, okay, so the TSLY dividends, the estimated dividends have recovered. It's still estimating like 50,000 for the remainder of 2024. But look here, the income received year to date has zeroed out, which is strange because I've definitely gotten dividends from Tesla. So see, not everything has quite adjusted from the reverse split because you would expect this to show at least what the dividends were for last month. Let me see if I can go like by month over here. Let's see, 2023. Okay, that's updated for 2023. It's hard to believe it doesn't feel like I made 17,000 in dividends last year. That's interesting for sure. Okay, let me stop the share here for a second. Where is the monthly? Monthly. See, this information keeps changing. But anyway, okay, the next thing I wanted to look at is Tesla stock because I think that Tesla stock is actually on a path to recovery at this point, even though the fundamentals may not be quite there yet. I think they will catch up at some point. So let's look over here. We can do some quick cash flow analysis. I won't bore you all. I'll keep it brief. 1 year target estimates up to 207.04. I believe the technicals are showing possibly a 220 by March, which that would definitely be a buy signal. See, we've fallen. We're still down $60 from the end of December. We were at like 180 on January 24th. So we've recovered. We've already recovered like 20 bucks in this one. So that's good. Let's look at financials real quick. It's going to take a couple of quarters for them to turn around their financials. But like I said, after the NVIDIA earnings and seeing how well NVIDIA's done, I don't want to miss out on another one. If I have the opportunity, if this is the cheapest that Tesla's going to be, I don't want to miss another opportunity to own it cheap. So let's see. I'm going to give you all a little cash flow analysis here real quick. And okay, this is the cash flow statement. So free cash flows are positive. That's good news. Why is this kind of like condensed here? Oh, we finally do have 2023. Let me look at the last few quarters over here. Free cash flow is positive. So you see we're growing every quarter, had a pretty good quarter at the end of 2023. Repayment of debt is hurting us in Tesla. Capital expenditures are hurting us. I have been seeing companies are starting to buy back some shares of stock again, so that could obviously help the stock price. Operating cash flows have been positive and have been snowballing in a positive direction over the last 4 quarters. Investing cash flow is going the wrong way. We are offsetting our operating cash flow. Financing cash flow is in the positive. We had a really good quarter that ended September 30th. December, not so great, but we've turned positive from negative. So Tesla could be on a pathway to recovery here. So it might just be a good time to buy. I got to get some more money in the account before I decide what I'm going to do. But I might definitely buy some shares of Tesla, or dare I say, some options on Tesla. That reminds me, we got to look at how Pelosi's Palo Alto networks have done too. Anyway, thank you all for tuning in. Like, comment, and subscribe if you haven't already. And we will see you all very soon. Actually, probably in the next 10 minutes, I'm going to start another video. Thank you all for tuning in. Join the Discord, subscribe, like, comment, spread the word, and we will see you all soon. Take care.